Hi, are you a corporate executive working in the non-finance domain? If yes, then do you have to factor the concept of accrual in your decision making? If the answer for this question is also yes, then this is the right video for you to watch. I'm Saujanya and I coach corporate executives and business owners to understand finance in the most practical way. In one of our training programs, which was captioned as Finance for Non-Finance Managers or Corporate Executives, we had to take an example to teach them or to help them understand the concept of accrual. In that example, we were focusing on the job profiles of the non-finance executives who are attending the program, because it's very important for them to understand the impact of accrual on the financial statements, because they have to factor the same in the decision making. Getting inspired from the same example, we have this video series, which is Accrual Part 1 and Part 2, which will help our viewers to understand the concept in the most practical way. Coming back to the context of this video, we will begin with the discussions of Part 1, where we're going to talk about expenses. Let's look into the meaning. The meaning of accrual is nothing but the transactions are recorded irrespective of the actual receipts or the payout. So we are not only talking about cash inflows and cash outflows, but those transactions where the cash inflows and outflows are not involved. This would deal with two aspects, like revenue and expenses. The shortest definition I've always been using in all of those contexts of discussions with my clients is the revenue is the right to receive the income established in favor of the entity or the business. And for expenses, the definition or the explanation of accrual would be the obligation to pay the expenses is established for the entity or the business because they have received some services. After we've understood the meaning and the revenue and expenditure perspective of articulation of the concept, let's look at the first one. When we talk about accrual, we have to understand from the perspective of expenses as well as from the perspective of income. In our Part 1 series, we would do a deep dive in understanding the practical way of the concept for expenses first. Let's begin with outstanding expenses. Outstanding expenses are those expenses which the business entity has to pay. It is yet to be paid, which is why it's an obligation. And the accounting implication in the form of an entry would be the rent, as an example taken in this scenario. Rent to outstanding rent means we are adding the rent to the amount of the obligation which is yet to be done. Let me give you a practical example. Any entity draws up two kinds of financial statements. One is a balance sheet, which is a scenario of assets and liabilities as on a particular date. Second is a profit and loss account or an income statement for a range of period, like for a year or for 6 months or for 1 month. So it's for the period ended 1 year, for the period ended 6 months. In such kind of a scenario, if we are taking in our example a profit and loss account for the year ended, then a 12-month expenditure has to be shown in the financial statements. So if the expenditure is not 12 months, say for it is only for 10 months, then another 2 months would be required to be factored as an outstanding rent. So once this outstanding rent is settled, the outstanding rent to bank would be the next set of the accounting journal entry which needs to be recorded in the books. In a practical way, 12 months expenditure is supposed to be presented in the income statement or the profit loss account. If the 12 months expenditure is short, to whatever number of months is the expenditure short, that has to be recognized as an outstanding expense. That's the most practical way we look at outstanding expenditure in the corporate world by any business entity. This is one part of the outstanding nature of the expense. The other part of the nature of the expenditure can be prepaid. We all have scenarios where the business entity would pay much in advance to the vendor for the services that the business is yet to receive. As the name suggests, it's called as prepaid expenses. In terms of understanding the implication of such expenses on the financial statements, there is a payout. So there's a journal entry where we can introduce prepaid rent as an example to bank. And this payout would be adjusted to the rent expenditure once the services is consumed by the entity. For example, in the practical scenarios we took, the profit and loss account is drawn for a period of 12 months. For whatever reasons, as we are not discussing as a part of this video series, for whatever reasons, if the rental expenditure is accounted or shown or presented for say 14 months, it is important that the 2 months of excess expenditure is prepaid and has to be factored as a reduction or removed from the profit and loss account, so that only the 12 months of rent is accounted in the profit and loss account, because the profit and loss account or the income statement is drawn for a period of 12 months. Coming to the last aspect of our discussion, how is this presented? The presentation would be again specifically shown as a part of profit and loss account and balance sheet. In the profit and loss account, as we have understood, it is to be factored as an outstanding rent and added to the existing rent nomenclature or the chart of accounts as an addition. So the expenditure plus the outstanding expenditure goes as an impact in the income statement of the profit and loss account. Coming to the balance sheet, outstanding expenses are liabilities, obligations of the firm. This needs to be accounted, presented, shown under the liabilities. Coming to the prepaid expenses, the obligation is already discharged by cash payout by the entity, but the entity is supposed to consume the services for which they have paid. So it's an asset for the entity. This particular snapshot of the accrual concept, especially relating to expenses, I hope it is useful to you. To summarize, we have understood the concept of accrual. Let's look at the practical side of it. The practical side of the accrual expenses talks about outstanding expenses and prepaid expenses. Outstanding expenses, we have taken an example of rent account. Rent as an expenditure is something which is based on time. So if the profit and loss account, which is a statement drawn for a particular time range, like profit and loss account for the year ended, and if it is drawn for a particular duration of 12 months, then the rental expenditure for 12 months should be shown in the profit and loss account. If it is short by either 1 month or 2 months or 3 months, to that extent the outstanding rent has to be added. So the outstanding rent would be 1 month if the rent is short. It would be 2 months if the rent is short by 2 months in terms of recognition. The next segment in the accrual concept would be the prepaid expenses. Prepaid expenses is where the entity has already paid out to the vendor even before consuming the services. That would be an asset to the entity because they are yet to receive the services from the vendor. So the outstanding expenses and obligation yet to be discharged, shown on the balance sheet under the liabilities column, and the prepaid expenses are an amount which is already paid out, shown in the asset side. We've also given you the snapshot of the profit and loss account. A prepaid expenditure is never shown in the profit and loss account unless and until a rental expenditure for more than 12 months was factored, because anything in excess of 12 months is removed from the profit and loss account if it's already accounted there. Except for those reasons, a prepaid expenditure impact will never happen in the profit and loss account. It's directly in the balance sheet and adjusted with the expenditure. I hope you've liked this video to help you to understand the accrual concept in terms of expenses. If you've liked it, do wait for our part 2 series where we're going to talk about the accrual of income, where we're going to discuss about the outstanding income and income received in advance. Thank you. And also, do not forget to like, subscribe and share this page, which you feel you can do it with people who will be benefited from this video. Thank you.